Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 101, NASDAQ up 24, S&P's up 8.5. Gold contract at $9.20, trading at $1,226 an ounce. Silver off 18 cents at $18.55 an ounce. Platinum off 5 at $1,346 an ounce. Copper down 4.5 pennies. The copper actually gave everything back. It went up 7 cents 3 days ago, gave back 3 yesterday, 4 today at $309.70 a pound. Light sweet crude down $1.31 at $93.11 a barrel. Bonds, we have the 10-year down 10 ticks at 123.23. 30-year off 8 at 135.22. King dollar down 76 at 84.41, and that hit the swing high, folks, from 2013. Euro up 55 ticks at 129, and the yen up 37 at 108.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're right at the highs. The high that we're talking, folks, is 2011.17. We got to 2011.79 today. That means you take it out. The high of yesterday up here was the 210.74. Volume out here, I suspect, is still going to come in light. That's in the indice now. We're at 368. The indice will probably come in around, it won't even do 660 today. Maybe about 5, yeah, it'll do 6 1/4 or something. Now, the SPY, different animal. Now, there's some divergence here, and this is pretty intense, actually. So the SPY. Yesterday, on the SPY, what we did is that we did 151 million shares, which is big numbers. The B point, so I'm going to make this, this is wicked. Bottom line is that it's going to be interesting to see what shakes out here. So the question would be, is that, okay, is this an ABC up? The A point on this could be 190. The B's up there at 201. It's like, okay, $11. Your C point is at 198, which can give you a 209 number. You know, because what you did do, you pushed into that 201.58, you did 201.68, you did volume. Now, what you're going to have out here today is you have tested that area. The area that we're talking about is 201.68. We hit 201.80 right now below it. So we're testing that. We have lighter volume. Tomorrow is going to be the big number. The reason being, folks, is this. You have Alibaba tomorrow, but you also have triple witching. So there's going to be volume in the market tomorrow. There's no two ways about it. So the real question inside that S&P, and I'm short the S&P right now, but inside the question in the S&P is that an ABC structure up? Because it certainly hit the B point, hit it with volume, and when you do that, first off, you go right back up and test it, what we're doing today, because it didn't hold price, but just slightly. So we'll see how this whole baby shakes out. Now, so what the difference there is, too, is this, is that is in the ETF structure versus the indice. The indice does not have the volume, but that ETF structure did have the volume. Dow Industrials. Take a look at the Dow. The Dow right now is up $104, and the Dow is getting away from all these highs. I mean, when you're this far away from this highs, this Dow can go higher. We're at 17,261, so you're $100 over the high right now. The putting strength into the Dow Industrials out here is DuPont. DuPont is up 177. You get Goldman up 356. J.P. Morgan Chase is up 98. American Express is up $1.17. Taking juice out of it, you got Chevron down 78 cents. ExxonMobil's off 35. GE is down. GE is up 20. So there's only 2 stocks that are negative inside. Intel's flat. There's only 2 stocks that are negative right now inside the Dow Industrials, and that's Chevron and that's ExxonMobil. We go over to the NASDAQ Composite. We take a look at the Composite. What you have with the Composite? Composite's up $25. Composite will also come in with short volume out here today. We're at 1.3. Composite won't be bad. Composite will be about 1.7. The 3 Qs, the NDX 100. What you have with the NDX 100? We're at 23 million shares. Yesterday we did 32 million shares. So it's going to take quite a bit in order to basically get up and over this price point of 100.46. We've hit 100.26 thus far. Gold contract, we go take a look at gold. This is what we have with gold, folks. Gold goes down to a price point today of $12.16. You are at $12.26 right now. You get that spike lower. Two separate spikes. Your first spike was at, well, last night at 10 past 6 in the evening. The spike this morning was at 0810. That's where it got to 216. Bottom line, rejected that lower price, come back up, had some juice inside that move. If you go over to the GLD and you want to see the correlation of what you're going into, bottom line, GLD also rejected lower price, and you're coming right into it. I love how this is coming into it, by the way, because it's pretty dramatic when we're talking about rejection of price with volume. So last week on the GLD, folks, you did 36 million shares. Thus far, what we've done is 24 million. Okay, so number one, it's not even going to be close to what we did last week. Never mind what it's coming into. It's coming into 63 million shares, which was the swing low of December, as well as 109 million shares. So I expect what you're going to see out here is, let's see, we'll be able to tell, we'll be able to get pretty close. So you got, oh, this is pretty cool. It's really contracting dramatically, actually. So you got 8, 14, 22, 27. You're going to do about 33 million shares. I suspect even by tomorrow. You know, so what that says is that you have gold rejecting lower price right now, and let's go right over to the dollar, because the dollar did exactly what it should have done, and what that was, it's pretty amazing actually. It went to 84.90, and when you bring the continuous dollar contract back, when you see this, it's a mind blower. It's 84.965 was the swing high. It's like, how does this work? Bottom line, we go to 84.900, and then it gives it up at that level. You do 31,000 contracts, which, by the way, is good. The dollar is showing that you did the full move in the dollar. I suspect you're going to be backing off. What's going to be intriguing here is this, is that the market itself, what is that going to mean when the dollar backs off? Because the dollar certainly went up and the market went up. Bonds. Let's go over to the bond market. The bond market, the 10-year and the 30-year, have yet to hit their swing low, which is pretty amazing because you have had bonds down almost 2.5 weeks in a row. We're at 123.23. The swing low is 123.12. We've made it to 123.18. The 10-year today has done 1.2 million contracts. That's not a monster amount of contracts for the 10-year, folks. Getting to lower lows like this, it should be exploding to the to the downside. Yesterday we did 1.6 million contracts. We take a look at the 30-year bond. 30-year bond out here down 8 ticks, and we are at a price point now of 135.22. The swing low is 135.31, 134.31. You know, so. In both cases, and what happens, folks, is that when you can't make swing lows or swing highs and even hit them and test them, the bottom line is that that is showing the strength inside of that bond market. We take a look at some of the high-volume stocks in a low-volume market, and this is what you have out here. Bank of America up 32 cents. Rite Aid's getting whacked. That's down to $1.33. You have Pier 1. That looks like it's in trouble again. That's off 256. You have Pfizer up 22 cents. Some of the Dow stocks. Let's go look at these Dow stocks. You have American Express up $1.17. Caterpillar's up 27. DuPont is up 181. We have, let's see, Honeywell is up 74. Big Blue is up 104. SHLD. This is SH. She's getting hit. This is good old Sears. This is getting hit pretty good. So this is down $1.44. Man, something's happening with this company. Holy cow. Okay. So, yeah, this is, yes, it's going after a high volume low. It's got a high volume low at 21 bucks. This is Tom O'Brien. This is TFNN. Stay right there. We're coming right back, folks. Dow's up 101, 104. NASDAQ up 24. S&P's are up 9.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow of Industrials up 108, NASDAQ up 26, S&P's up 9.5. And folks, as you come over to our website at TFNN, you're going to see right on the front page the virtual trading competition. We're giving away $10,000 in cash prizes, and it's free to enter. What you do is come over to our website at TFNN. You have from today until next Thursday at noontime to sign up. I suggest you sign up right now so you don't forget, because Thursday at noontime, it's shut off. The contest, the trading contest, is going to start on Sunday, the 28th of September. It's going to go through October 3rd. It's going to be on Nadex. And Nadex, of course, you can trade currencies, you can trade indices, you can trade the commodities. Great trading platform. You've heard the commercials many times that your trade is your stop. Nice volatile market. You get some action out here. And the way the prize structure goes like this. First place gets $3,000. Second place, $1,500. Third, $750. Fourth and fifth, $500 apiece. Sixth through 10th, $250. And then we have a lot of time in the trade books that we're going to give out. And on top of that, the Monday through Friday of the competition, we're going to give out 500 100 cash prizes just for participating in the trading contest. All the details are in the front page of TFNN. Now, folks, let's go over to our man, Mr. Andy Heck. Andy has an outstanding show right here at TFNN every Tuesday, Thursday, right after I finish at 5 o'clock, 5 to 6. Also has a great newsletter, the Technomento Commodity Report. You can get that newsletter by coming over to our website at TFNN. Go to newsletters, trading newsletters. You can test drive the Technomento Commodity Report right here, right now. Andy Heck, what's going on?
Hey there, Tom. How are you?
I'm doing great. You having a good day?
I'm doing fine, thank you.
Cool, man.
I want to talk about copper to start.
Okay.
And I have a chart up here. I have a weekly chart, not a daily chart.
Okay.
We saw, so let's just give a little background.
Yeah.
This week, the People's Bank of China added $500 billion, 500 billion yuan in liquidity. And when they did that, copper exploded up to 321.20.
Right.
And it failed.
Yeah.
And as you said in the beginning of the show, it was up 7 cents that day. It spent the last 2 days giving all that back. But I want us to keep our eye here on the weekly chart in copper.
Okay.
And if it closes tomorrow below 305.90, you will have a key reversal on the weekly chart in copper. Now, copper is an important bellwether commodity for the entire sector. And if we close below that level tomorrow, it could signal, some more selling and some more weakness in commodities in general. I like to look at copper as kind of a bellwether.
Okay. That's, it is interesting how it gave it back so quick. Well, what's so intriguing about that, Andy and folks, is that, so the way this went, and this is what that sent on a news article, sent our markets up, and that correlation, by the way, the 500 yuan was only going to 5 banks. And what they, so it's like a mix and match, basically. Do you know what I mean? So, and
right, absolutely.
Supposedly, well, from what I read about it, is that they're trying to keep the money away from developers. That's the bottom line. They want to get it. They want to get
added liquidity.
Yeah, it reduced the rates for certain companies, for production companies, by 0.5%. Right. That's what it did. Yeah.
Right, and you know what else it did? It stopped out the shorts in copper.
Yeah, well, and rallied our markets. There's no doubt. The thing that was amazing is that it rallied our markets, and Shanghai, it didn't rally Shanghai. Let me see that. Shanghai has been getting smoked, folks.
Well, talking about stopping out shorts, very interesting. A very illiquid, thinly traded market today stopped out a lot of shorts. I got a chart up, a 10-minute chart of frozen concentrated orange juice, the market that was made famous by trading places.
Okay.
And if you look at this 10-minute chart, you'll see that this morning on the opening, orange juice opened at 143 and traded up to almost 150, which is a massive move in 10 minutes, and stopped out any short in that market.
Wow.
Yeah.
So let me just see this for a second. So funny.
Volatility, Tom.
Yeah, no, I know. So a tick size, a value of a point is $150.
Yeah, 15,000 pounds per contract.
Right. Oh man, that's a trip. So gold.
Gold. Let's talk about gold.
Talk gold,
I maintain my view. This gold market is dribbling.
Yeah.
It's making lower highs and lower lows, and I think we have to test that December 31st level here. The dollar is strong. Interest rates are, there's worries about interest rates. But more importantly, there's really no interest in gold, and I'm not seeing the level of physical demand that, we've seen in the past and the like. I mean, look, these things can turn around on a dime. But as I said to you on Tuesday, until the gold market shows me something, I can't be bullish here. This thing is it's a ski slope. Since really we made this price in July 10th, we've seen very little love from the gold market, and actually we haven't seen a rally at all since August 14th. I mean, we're talking about a month. This thing has just gone one way.
Oh yeah, no doubt. So you're looking at 1181 then, if you're looking at December.
Yeah, I'm looking at 1181 level. That's like 1185 on the futures. As support. We break that. Who knows? I actually, Tom. I mean, look, I always keep gold in my portfolio, but
listen, man, it doesn't matter.
I want to see a washout here, because I think that's where the next buying opportunity comes from.
And oil.
Okay. Oil's bouncing around. I continue to be bearish on oil here. I'm kind of bearish on commodities in general, unless there's a couple fundamentally that I like. I like cocoa for fundamental reasons. I like coffee for fundamental reasons. But oil, Tom, the narrowing of those spreads, the nearby oil contract versus the December 2017 contract in June was trading at almost $18.
Okay.
Now that thing is trading at $5. That means that there's no supply shortage fears in this market.
Wow.
And oil's bouncing around. I think we couldn't get up to that 96 resistance when we rallied yesterday, and it's given back a lot of it today. The products are also weak.
I think at 85 on it. Natural gas.
Natural gas. Numbers came out today. Let me pop a chart up. Numbers came out today. We were expecting an 89 billion cubic foot injection. We got 90, so it's a down day in natural gas. Again, winter's coming. We're going to eventually go from injections to withdrawals. I think, it's going to be driven by the weather, but based on where inventories are, 12, 13% below the 5-year average, I think every dip is a buy in this market. Stuff's still cheap.
Let me ask you,
sure.
The amount of the draw, that wasn't that bearish, was it? Today?
What, today's number?
Yeah.
The injection, it was like right on the number, but we were up around $4, and if it's over, they like to sell it.
No, I know that. I'm just curious because I heard a couple of analysts saying, no, it's way over. I'm saying to myself, it doesn't sound like it's that much over.
No, I heard 89 yesterday.
Yeah. Stay right there. We'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, I get the Dow Industrials up 106, Nasdaq up 26, S&Ps are up 9. We're talking about our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, 5 to 6 Eastern Time, you can listen to Andy. Great show. We're talking commodities right now. And so when we look at this gas market, so when these gas numbers come out this morning about the injection, I guess the way the gas is setting up here, I mean, it just looks like you are bouncing around this bottom. I mean, it hasn't really done any destruction here after that leg down. You there, Andy?
Yeah, I'm here. You hear me?
I can now. Yes, thank you.
Oh, I'm sorry. The withdrawals start to happen in November, obviously, when it's cold out.
Right.
It's very interesting. Someone in the den, Danny in the den, brought up something interesting. There was an explosion, a pipeline explosion over the weekend.
Okay.
And that's one of the reasons that natural gas rallied. And he asked if that affected today's numbers. But today's numbers, we have to remember, are as of last week, or as of the 12th of September. So those numbers will come next week.
Right. Right.
If there's any effect. But look, we're still, 12, 13% below the 5-year average. The bottom line, Tom, it's all about the weather. You get a cold winter, man. You're going in with lower inventories. Last year, we went to above $6. I'd say the downside's pretty limited. I'm a buyer of natural gas as long as it stays above this 374. There seems to be some really strong support there.
Yeah. In the context of the commodity market in general, you've been doing this commodity market, pushing 30 years, right?
Yeah, don't remind me. More than that.
Okay. So, when you look at it, the swings from bullish to bearish to bullish, is the swing to bearish an overstocking? I mean, because commodities, if there's more commodities, I mean, if there's more supply, right, than demand, what normally does it? Is it an economic deal that does it, or is it an oversupply that does it, or something else?
Look, I'm a fundamentalist.
Yes.
So I look at each one separately.
Okay.
And each one has to make their fundamental bullish or bearish case to me. But there is an overriding macro picture that goes on. The dollar really is is a very strong influencer on commodity
That's
prices.
why I'm asking. Right. Okay. Cool. Right.
It's a very strong influencer on overall commodity prices. But you had this is kind of like dominoes falling this year. It all started in the spring, in the late spring, with the grain prices. They topped out, and they spent the whole summer coming off. Oil, it rallied big on the ISIS issue and the Russian issue in June, and then it just petered out, and it's been coming off since. So what you're seeing, and the dollar started rallying, so you're seeing kind of almost a kind of a shift in the whole sector. As I said, Tom, you got to look at each one of them separately, because there's stuff like coffee out there, cocoa out there. That stuff looks very good to me.
Yeah.
But if I look at it in a macro sense, I still like the dollar here. I mean, look, you're right. It might correct a little bit lower here. It might flatline for a while. But I think the trend's your friend in the dollar, because what currency do you want to hold today if you look around the world?
Listen,
you certainly don't want to hold the European ones.
Yeah. My take is the dollar, that made its low in 2007. There's no doubt. I mean, hey, listen, the thing that's bizarre, folks, not bizarre, but it's on the table with the dollar. If this dollar is doing an ABC structure on the way up, and this is a long-term ABC structure, and that's what it looks like, the bottom line is that we're going to be at this 89.75 to 90, and if you take that 90 out, guess what? We're going to 121. So,
which Tom, makes sense to me, because you know what? Given the relative strength of the European economy and all their problems there, the U.S. economy, I think the euro's headed back to parity against the dollar. I'm not saying next week, next month.
No.
I'm saying over the next couple of years.
Yeah,
I can see it at 1-to-1.
No, I can too. I can see us on the Amalfi Coast, man, grooving.
Absolutely. So what do you make of the Scottish vote tonight? I mean, this is really interesting.
I am really hoping that the Scottish people go for independence. I am, and listen, I'm a quarter Scottish and 3/4 Irish. It's McSorley and O'Brien, and there's two big issues to me why I'm saying that. I can't stand heavy powers that come anywhere and just destroy everything. And in this context here, what you've got to see, folks, is that how power. Listen, the only way you can get rid of power is take it away, folks. Okay, power is never given up. So the British are never going to give up, and we don't blame them, but they're never going to give up. You have to take it. And in the aspect,
it kind of historically, Tom, isn't it the last vestige of the British Empire?
It is, and the thing that's cool here, though, the thing that's cool no matter what happens, folks, is that if you watch how power moves, right? And I'm not just talking about the British. I'm talking about the power structures in the United States, the power structures in the media, the power structures in the world. What I've got out of this more than anything, and I've got out of the past, but I always love it when I see it, is that folks, there's certain folks that think they're powerful in the media and everyone else. Then there's certain folks that really are powerful. And it's amazing. They all want to make sure that the Scottish don't go out, and they'll say anything and everything to make sure of that. But what that's really about, folks, is fear, and fear for their own power. That's
right, exactly.
That's the biggest
interest.
picture that I see. You know what I mean? And that's why.
Yeah, I get you.
Yeah, and then okay, so now that's on a theoretical deal, or on an ethical deal.
By the way, if you get your wish, the dollar index is going to explode tomorrow.
Right. So now listen to this. Now this is where it gets financial, which is hilarious to me, folks. So picture, financially, the Scottish own 90% of the North Sea oil. No one's going to have to work. You know, and you hear a million things. Oh, the North Sea oil is going down. It's doing this. You hear the bank saying, oh, we're going to get out. Let me tell you something, folks. If the Scottish people leave the UK, there'll be more banks there. They're going to be there genuflecting on their knees, praying, okay, that they give them the business. No one's going to leave. You know, you're going to see the vultures turn around and, you know, be in the confessional saying, oh, my God, Father, I'm sorry I said anything. It's, you know. So it's going to be...
So what does your gut tell you, Tom? Does your gut tell you yes or no?
My gut tells me yes.
What are they going to do?
My gut tells me that it's going to happen. And it's going to be basically probably a shocker. Yeah. Yeah.
Really? Yeah, I will be a shocker because my gut says no. And let me tell you why. I just think, and I don't disagree with anything you said, but my gut tells me that people are always complacent and they like the status quo. And there's a big, big PR campaign for this no vote. And I think it's a coin toss here. I mean, it's going to be close. Whatever it is, it's going to be close.
I absolutely agree it's a coin toss. And I agree that when you said my gut feeling, I'm saying yes, and I'm saying yes because in the context that I'm saying to myself, I'm trying to look at it and saying to myself, is there more fear than independence and love? And what they have going, is that the older people are all worried about pensions. They'll get them worried about anything, man. Just throw the biggest fear in them. The younger kids are saying, hey, man, you know, I can do this. So it's...
Right, and by the way, interestingly enough, they're letting 16 and 17-year-olds vote.
Yeah, well, that's how it's always been. Do you know what I mean? So that's not different. That's just how it is. Period. So that's I understand that's not normal
here. I actually didn't know that till yesterday.
Yeah.
I mean, I thought it was 18 like here.
Yeah. Right.
Yeah, it's interesting. I'll tell you what, it's going to cause some volatility. If this vote is yes, I reckon that the dollar index will be zooming tomorrow.
Well, you know it's wild. This is what really cracks me up. That in the context, and this is what you can get out of larger negotiations and arguments too, folks. There's only 4.3 million people in Scotland, folks. There's 4.5 million people in Greater Boston. So all you folks listening in Greater Boston, there's more people in Greater Boston than there is in Scotland, right? So when I hear that the markets are going to go bonkers, I'm saying to myself, oh, really? And I agree with it, but that's when you cut back to the chase and you're going to go bonkers because guess what? You get 4.3 million people owning a huge amount of assets. It's like, oh, no, how'd they get those assets?
That's right. That's right. It's very interesting. Man. And, I mean, there's also, I lived in London for a number of years, and there's also that kind of anti-royalist kind of, all about tax dollars go to support the royal family. That's been going on for decades now. That's got to figure somewhere into this whole thing, too.
Oh, listen, it figures, listen, I grew up in a house that had signs, still Irish need not apply, and when we left, I'm the wrong person to talk to about that whole deal. I have a prejudice towards it. There's no doubt. It's generational.
I'm just saying, from being kind of an independent bystander and living over there, it was always, and I lived there during some crazy times. I went to school there in the early 80s, when everything was going on in Northern Ireland, and the anti-royalist feelings run very strong in Ireland, and in Scotland too.
Yeah, right. They should. They killed a lot of people.
It's going to be fascinating.
Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. Dow Industrial's up 113. Nasdaq up 27. S&Ps are up 10. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow Industrials right now up 114. Nasdaq's up 27. S&Ps are up 10.5. And that future S&P, let's go over there because she's starting to move away from that high, period. We are at 2004. That high is at 2002.25. We take a look at this on a 10-minute. And let's see what we got here. Okay, so you just got a little push up in this last 10-minute bar at that 205. So it's going to be interesting because you had 9 minutes left. And realistically, it looks like that top would have to get tested first. And we'll see whether it backs down and gets under the high. It says a 1.5 above it right now, or 2 points above it. About 2 points above it. Dow Industrials is above by 100 points. That's a big number. That's a big number above the last highs. And those last highs were out there. Going all the way back to July 17th. NASDAQ Composite, that's still not there yet. You do have Alibaba. Well, Alibaba is going to basically put juice in the market anyway. It's going to put juice in the market. It's going to put volatility in the market. The composite itself just is not a lot of juice. It's interesting, particularly with the Dow up. Well, let me see percentage-wise. Yeah, you know what's interesting? Yeah, see, once you get to a high, you can just get slightly higher, and it looks like it's quite a bit higher because the Dow Industrials are up 0.6%, where NASDAQ is up 0.6% also. So it's up the same, but it just doesn't look the same when you're actually looking at it. The S&Ps are up 0.5%, and the Alibaba price will price out tonight, and after that price out, it will start trading on the NYSE tomorrow morning. And that is going to be a fast and furious and highly volatile deal, folks, because what you have is that you're not only at highs in the marketplace, you have triple witching going on, option expiration, and Alibaba. So what you have is this. On option expiration, on a triple witching in particular, right, what you have is that you have huge amounts of buys and sells at the open, because the S&P is going to do a registration before, right at the open. It's the opening price, okay? So that's when you always see this huge volatility. He's gaps up, gaps down, all of the above. So right at the open, you're going to see it happen, actually before the open, and then what you're going to see is you're going to see it right at the close. It's pretty intense, and the intensity has to do with how many positions are going to be on, number one, and bottom line, how many hedges either closing and or opening up. Let's go to Tom in Waterford, Ohio. Hey, Tom, what's going on?
How you doing, Tom?
I'm doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
Wait was worth it. I like listening to Andy. He does a pretty good job on commodities.
He does a great job. Absolutely, man.
Does. I got that Mbella. I was wondering what you thought about it.
Let's take a look. You got Mbella. It's AMBA. They manufacture high-definition video compression and imaging processing semiconductors. The low is 16. The high is 40.94, which was generated, I think, today. Yeah, today. Okay. You're taking a swing point out, and you get juice. Okay, let me take a look at this.
I got in that right after the IPO, about $14.
That's a beautiful thing, man. Well, I'd stay right there because what you have is this. When I put this on a weekly or a monthly, you consolidated from December of 2013 all the way over to September of 14. You take that out, and it had enough juice, so your 8 point on this is 13.36. You get $20. Oh, interesting. It just finished an ABC structure up. This is wild. So the A to B equals C to D is $41, folks, and this has hit 40.94. I'd still stay here. Let me put this on a monthly for a second. 1 second.
On the weekly, it's really up on the weekly. The weekly, on the second resistance. It's above the second resistance.
1. I just tighten all the stops up because what you have is this, okay? So an ABC structure on the way up, folks, or the way down. You can do a 1-to-1, 1 to 0.382, 1 to 1.50, or 618. This A to B is $13.16 to $36. So 13, 26, 36, 13, 23, 33. So it's $23. The C point's 21, so 31, 41. Oh, 41, 40, 44. So just a to B equals C to D is 44. And if you get, stay right where you are and bring the stop up. And what this is, Dave White's telling me in the den, and I'm sure that you know this, Tom, is that this is the chip that's in GoPro, right? That's what's going on with this? Yeah. How cool is that, right?
And they got something going on with Google, too. That's what made it pop in December.
Yeah.
It took out a high in December.
Yeah, well, this is certainly, it has wide price spread, it has the volume, it has all the above. So watch, we have, let's see, we have plenty of days trading left in the month. We've already done 32 million, and it only has to do 38 on a monthly basis to take out, it's already taken out the swing, but to take it out with volume. So you get the 15, it looks like it's going to have it, and that's clean. So it's, you get yourself a large ABC structure on the way up. RSH you want to take a look at, right?
Yeah, I got that. My son, I put it in his IRA just for respect. I ain't got a bunch of it. I know it's
here, let's pull it back. So you get that one pop from, 50 cents going up to $1.77. I wonder if, do they own any of those stores? They own, that's the only thing I could figure is be worth any money out of them, but...
That's why I said Amazon could buy them. That would be a great distribution or something.
Well, there's no doubt that they have a lot of stores. It really depends on, do those stores, do they own any of them? Because what you do have is that business-wise, they're in tough shape right now. Look at this, though, man. This is pretty amazing. They still take in $3.4 billion, folks. That's pretty amazing. Well, the good news is that you're not into it in a huge amount of money. The way that, what this hasn't done, now these ones here get dangerous, folks, in the aspect that you had that wide price spread accelerated volume, but you never got to a swing point. That's always a problem. And when you don't get to the swing point and you come off bottoms like this, it turns into a problem. Cooking, brother.
All right. Thanks, Tom.
Great hearing from you. Have a great one. Have a safe one. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up about 108. Nasdaq's up 30. S&Ps are up 10.5. Gold down 10.30. Silver off 20 cents. Bonds 10-year off 9 ticks. 30-year off 7 ticks. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's take a look at one of our cards. This is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 109, Nasdaq up 31, S&P's up 11, gold contract down $10.20, trading at $1,225 an ounce. Silver off 22 cents at $18.51 an ounce. Platinum off $6 at $1,345 an ounce. Copper down 5 pennies at $3.09 a pound. Light sweet crude down $1.35, $93.07. Heating bills are going to get lower for all you folks in the Northeast and the Midwest. Gas is going to get lower. Bonds, you had the 10-year down 9 ticks, 30-year off 5 ticks. In both cases, folks, what you have is that they have not reached their swing lows yet, even though they've been down for 2 weeks straight. That is a bullish deal. King dollar off 71 ticks at 84.41. King dollar made it all the way up to the 84.90 level. That was testing the swing high of 84.91. I suspect we're going to get a little pullback in King dollar. Why? That was a 100% move of a move. Great move, no doubt about that. Euro up 55 at 129.20. You got the yen up 37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We got a cash S&P that I believe is over the high, folks. We are at 211.68. The high is 211.17. So you're not a full point over the high, but the bottom line, you're over the high. You've done 671 million shares versus, let's see, I know it's 705 is one of the current, versus 705. You look at the SPY, the SPY. Yesterday we did 151 million on the SPY. Today you did 189 million. You closed over the high. Bottom line, close over the high. You can go higher. NASDAQ. What we did in the NASDAQ is this. NASDAQ did volume of 1.7 billion, and NASDAQ is at a price point right now of up 31 bucks at 45.93, and that says, I suspect, on the open out here, you can have the NASDAQ also hit its highs. Russell 2000, the RUT, we go take a look at the Russell, what we have with the Russell. This is really intriguing because the Russell just can't handle price at all. So you have the NASDAQ at highs, well, you have the S&P at highs, Dow over its high, and the small caps are 75 points under their high. And for the small caps, folks, a point is really hard to do, period. So the small caps are up 4 bucks today. The small caps have a problem here. We look at the IWM. What you have with the IWM is this. IWM closed out here today. Look at this. 23 million shares, up 70 cents, and the 23 million is going into 41 million. They just can't handle price. It's pretty amazing. It must be inside the commodity markets because that's pretty intense. No, let's do gold first. Gold. So what do we do with gold? Gold gets down to a price point today of 12.16, rejects that level, has 139,000 contracts. Bottom line, what I expect you're going to see out here, folks, is you're going to see gold starting to go higher as the dollar goes sideways or lower. You know, we've been straight down since the July 10th at 13.47. You're at the 12.16. If you want to look at that correlation, the correlation inside the GLD is pretty clear. We come down with 5 million shares today. Yesterday, you get to a low with 8.3 million. You get to a lower low, but that's not even close to what it needs in order to basically break out these bottoms. The first bottom, after coming down for approximately, I believe we're coming down for about 2.5 years. So the high in gold was, September of 2011. So September of 2011. We came down from September of 2011 to June of 2013. 2011, September 2012, September 2013. Yeah, that's a year and a half. You make that high, you make that low. That low, folks, was established at 114.68. The GLD on a monthly basis made that low at 254 million. We bounced. We came back into that low at 185 million. So your correlation is 185 million going into 254. We are coming into that with 85 million, so maybe you do 100 million. Do 100 million versus, let me see. Now, even if we do 125 million. I get it. Bottom line, 125, you're ballparking into 185 into 254. This baby's going to not break those lower levels out. Now, the aspect of 1181 inside that gold, that is what it takes to get gold out of the ground. That's what my take is on this, folks. Why? Let's go with a king dollar. King dollar has done exactly what it should have done, and this is what's really cool. So the king dollar, I expect, is going to go higher, too. We went dramatically higher, and it did exactly what it should have done. Specifically, wide price spread, accelerated volume, ABC structure on the way up. 84.96 is the swing point that was established in July of 2013. And today out here, we hit 84.90. Now, that's on the short-term basis, because the longer-term basis, what you do have with king dollar is, I suspect, this looks like it's going to be an ABC structure on the way up on a monthly basis. And this is a very large ABC. Your A point on this is 72.86. Your B is the 84.90. So you got, what, 12 bucks, 12 points. Your C is 78, which gives you 90. 90 would bring you all the way to the swing high of 2005. That level, check it out, which is pretty intense. You get to that level, and if we take that level out, let me tell you something. That would be saying that King Dollar could be on the move to 121 again. Now, that'll take years. I remember when we got into the gold market, and, you know, when we got into the gold market in 2001, and that's when King Dollar was 121. And the amazing thing, if you want to just see technically how these things set up sometimes, if you happen to have one of the first or second gold reports, bottom line is I thought it was, you know, insane at that point, but I say, you know, saying, man, you know what? This thing is going to be making its way all the way down to the 78 area. And bottom line, it not only made it to 78, it made it to 70. And what that's all about, folks, is that the structure on the way up was a monster structure that extended itself way too far, number one. Gold extended itself way too low, number two. Those correlations when you put them together. The dollar right now has been building cause for quite a while. You know, it's a longer-term structure, but the bottom line is that the dollar does want higher price. Bonds. The ever-ready bond market, folks. It's pretty amazing that bonds have not been able to get down to their swing low. This is like wild. We're getting close. You know, 123.12 is the number. We made 123.18 today, so it's only 6 ticks away. We came down 10-year, though, in light volume. We did 1.2 million contracts, 1.6 yesterday. So I suspect, you know, that we are going to hit it. It looks like, I mean, tomorrow morning we'll see whether we can hit it. Tomorrow morning you have huge amount of volatility, folks, before the market opens because we have option expiration on, and it's triple witching. So on option expiration, you're going to have the futures expire on the open. That's what makes it so volatile. The 30-year bond, the swing point is 134.31. We've come to 135.25. So what is intriguing is that the 30-year absolutely is stronger than the 10-year, but my take is that, yeah, they both want to go higher. If you want to see that correlation inside the TLT, what you can do is this. We take a look at the TLT. TLT out here today, this is even bizarre that it was actually up. I don't know how it was up. But this is what you have. We put this on a weekly basis, and what you're going to see is that last week we did 43 million shares thus far. This week we did 34 million. Well, you're going into 44 million. So the TLT itself doesn't have enough juice to break those lower swing points down. Oracle. After the close out here, Oracle coming out with their numbers. What is pretty amazing out here is that Oracle's going to buy back $13 billion in shares, and that's going to be all about, this is Larry Ellison is going to step down as Chief Executive Officer of the software maker he founded, making way for new generations of executives. And Mark Hurd is, bottom line, going to be the president of Oracle. It's pretty amazing. Mark Hurd, of course, was the CEO of Hewlett-Packard. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And if we take a look at Larry Ellison, folks, okay, so bottom line is that he is going to basically be riding off into the sunset. 70 years old, done an amazing job, no doubt. He has a net worth of $46 billion. So Oracle closed at $41.55. It's trading at $40.62. Now, what is intriguing here in the context, and this is just smart period, their earnings per share, the estimate was 64 cents. They made 62. What you're going to have here, however, though, inside of this, what you have is that Oracle also is going to be buying back shares, and as we talk about buying back shares, this is where they can hold stock up. Stock's down a point and a half right now, but certainly not getting killed because Larry owns 1.1 billion shares, not million, billion, 25% of the company. So it's pretty intense. And as our man Dave White was just saying in the den, is that, yeah, this is going to be one of these deals like Bill Gates, that on a continual basis you're going to be selling shares. Bottom line, though, is that let's go over and we take a look at Oracle, how it's performing after the close out here. So she closed at $41.55. It's trading down 90 cents. This is an equity that had already gapped down. So if we take a look at this, put this on a little bit longer-term basis, what you will see is that, you get a changing of the guard. He not only got out with his skin on, which is pretty amazing here, but this is pretty cool, is that the high, you talk about a ride, okay, so check this out. This is pretty amazing, actually. So if we go back to 1998, Oracle was $3. And 2000, listen to this, this is sick. And so it goes from $3 in August of 98 up to $46 in September of 2000. $3 to 46. Then, when the NASDAQ crashed, this crashed to $8. So it took from June of 02 to get back up to this level. He's leaving at a good time because you're coming into, you talk about coming into highs, man, with no volume. You're coming into big highs with no volume, no doubt about it. Well, another new CEO out here is at Clorox. Clorox is going to get a new CEO. Don Kraus is stepping down, and Clorox closed at $89.90. This is trading at 90.92, so whatever is happening here, Clorox has been on a downtrend, but we'll see. They're naming Benner Dora as the new CEO. Oh, this is a big one. Okay, so here, let's go look at Home Depot. HD. So Home Depot, you know, the public relations of a lot of these firms, man, I just don't understand how you can be so big. It's always hard, of course, public relations in general. But what I can't understand, well, actually, I guess I can. Because they realize if they just lie at the beginning, I guess it's better for them. Because that's what this is all about. So Home Depot, you remember, okay, so Target had got hit, and then Home Depot got hit. And when Home Depot got hit, like it was 3 or 4 days, folks, okay, that, you know, they claimed that, no, there's not problems, there's not this, there's not that. Well, the bottom line, they just came across. Now, Home Depot says the cyber attack put about 56 million payment cards at risk. 56 million. 56 million. Oh, man. Home Depot closed at 92. It closed at 92, and right now it is trading at 91.81. RHT, let's go take a look at Red Hat. Red Hat closed at $60.66. That's trading at 59.30 right now. Let's see what they say. This is blowing my mind. I mean, we get numbers all over the place again here. So they beat their estimate. Billings are up by 16%. Revenue, okay, so the estimate revenue is $434 million. They took in $445. The earnings estimate was 38 cents. They took in 41 cents. You know, so they made their numbers, but what you do have here is that it's down $1.30, 2%, and yeah, there's no. And this is still in the consolidation. The top of that consolidation is 62.75. Just can't seem to get over it. Tomorrow, of course, what you have, end of another week, option expiration, Alibaba, all of the above. And inside the NDX 100, still about good old Apple, folks. Because what you have with Apple, this is the, let's see, this is about the, looks like it's about the 7th week in a row. No, it's only the 5th week. Okay, so it's the 5th week in a row that it's trying to get up and over and stay over 100.72. And what it's managed to do it every week. And right now you're at $1.07 over it. The volume characteristic is still not there. You know, we'll see whether we do it. What we are going to have tomorrow is this. The markets themselves are absolutely going to have a shot to go topside with volume. Because we have option expiration that's happening. Big volume's going to come in the market on option expiration. You know, we'll see if, in fact, you have volume off the highs or, in fact, you have up and over volume and you're going higher. You know, the Dow Industrials, inside the Dow Industrials today, there's no doubt they got the Dow higher. Let me actually go over to the transports and take a look at the transports. The transports are at a high right now also. They're at 86.76. We pull these back and we put these on a monthly basis. Put some volume underneath this. So, yeah, it's been a straight line move for the transports also. The markets in general have been a straight line move. Some of the high vol. Oh, actually, let's go over to the XLF first. The XLE pulled back. The XLF got a little juice into it today. XLF was up 23 cents. BRK, Berkshire Hathaway being the largest weighting structure inside that. That had juice inside it, no doubt. That was up $1.67 today. I can make a case that this could be an ABC structure on the way up, too. This is going to be wild watching this whole thing shake out. If we go to the XLE, just the opposite. The XLE just doesn't have the juice. XLE is still an ABC structure on the way down. As is, by the way, and this is where some divergence in the marketplace is, as is the small caps. The small caps are still in tough shape. So how that shakes out is going to be pretty wild watching this. If we look at the IWM absolutely can't get out of its way. And the leg down is pretty good. It's 117.80 to this 113, so if you get $4, the C is probably where we are today, which gets you a 111. 109 to 111 is the low that was generated on August 1st. What we are going to have out here, I suspect, let's see, yeah, by the time I'm actually coming off the air, and what's really going to be cool is that our man, Mr. Andy Heck's going to be on, is that we're going to start getting preliminary voting in as to what has happened in Scotland. You know, so that's going to be intriguing for a lot more reasons than just the market. It's going to be all about empowerment, folks. 877-927-6648. You stay right there, folks. We'll come right back. Dow Industrials finished up 109. NASDAQ up 31. S&P's up 10.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Folks, as you come over to our website at TFNN, you're going to see that we launched a $10,000 cash giveaway trading contest. This contest is going to start a week from this Sunday. It's going to go from September 25th going over to the October 3rd. So it goes Sunday night until Friday afternoon. The contest is going to be on the Nadex platform. It is absolutely free. As you come over to our website at TFNN, you sign up. It's pretty cool what we're going to do here. So as you sign up, you know that we have this Tiger's Den. As soon as you sign up, you can get into the Tiger's Den. No credit card, no nothing, okay? We figure that all you tigers and tigresses can be growling and prowling out here together, getting some good ideas to understand, number one, how to trade the product, and the ideas will be going on there 24 hours a day. So you'll sign up, you'll get in the Tiger's Den, and then a week from today, Thursday, will be the last time you can sign up at noontime. And the reason for that is that we have to get everything ready and test it out on Friday before we start it on Sunday. What you'll also get, I'm going to be doing a workshop that night, 6 o'clock that evening, Thursday evening, so that you can understand how you want to trade the platform, number one, and what you may want to do inside the currency market, the commodity market, or the indices. You can trade all of those. They trade, bottom line, 23 hours a day, 24 hours a day. If you'd like to join in that, it's free. Come over to our website at TFNN. The first place is $3,000. We're going to have we did this last year. It was awesome. I suspect this year is even going to be better because what you do have this year is that we have many more contracts. The spreads are out there. The volatility is out here beyond belief. And then when the contest starts on that Sunday, from Monday to Friday, we're going to give out 5 separate $100 cash prizes just for trading. The folks that win the first 10, of course, is that we start with $25,000, and then whoever has the most amount of money on that Friday, and we'll have a leaderboard. It's a leaderboard, so every day you're going to see this change. That is going to be the cash they get there, but if you just trade, period, you're going to have a chance to win. We're going to do randomly 5 separate winners each and every day. That's going to get $100 each day. Let's go, man. Everyone's getting new CEOs. JPLU. Look at this. This is really crazy. So JetBlue closed at $11.33. Thanks, David. Really appreciate it, man. Man, Dave White, he keeps me going. He makes this show easy for me, and I really do appreciate it. So JetBlue. This is pretty wild. Let's see. So it says Robin Hayes is going to succeed Dave Barger as CEO. I wonder what's going on. You know, it's amazing. Robin Hayes is going to succeed Dave Barger. In June, Dave Barger indicated he would decide by the end of fall whether to extend his term. Bottom line is that that closed at $11.33 and it's trading right now at $11.90. So the market likes what is happening there. If we do take a look at JetBlue and we bring this back, we put this back 10 years, what you're going to see, put it back a little bit. Yeah, you're going to see JetBlue's not even close to its highs. The high out here was 31. You're at $11. You know, it is amazing, and it's smart. There's no two ways about that. I suspect a lot of this turnover, folks, has to do with you're at highs. Folks that have been in this market for a long period of time. Okay, if we take a look at the SPY, what you're going to see. Which is amazing. Right now, I have the SPY. I have the SPX, actually. I have the SPY up since 1994. And what you're going to see, and actually I'm going to make it a little bit longer than that. I'm going to make it 25 years. I can't even believe 25 years. I can't believe I remember some of these numbers. That's what really blows my mind. Okay, so check it out. In 1990, the SPX is at 300. It stays at 300 to 400 until 1994. It's 442. And that's when things really start happening, folks, because the first, I remember this so well, too, the first real spring higher, you know, after the 80s, this is, okay, is that we went from 449 up to 681. And there's no way that anyone could do anything wrong. And we were all geniuses. And now check this out. This is what's so intense. And then I remember the spring. And what happened in the spring was this. So the S&P went from 680 and it went down to 605. Okay, so think about that. That's only 80 points. That's 15%. But you know what, folks? If you were around then, people got wiped out. And it was like, when I look at that now, I'm saying to myself, that was only a 15% correction, and how did so many people get wiped out? Well, what happened is this, is that because there was never a down month, there wasn't a down month, okay, from November of 94 all the way up to May of 96. So people were leveraged to the hilt. It didn't matter what you buy, it went up, and all you had to wait for is a couple days. So the amount of folks that were leveraged over the hilt were amazing. And then what they did, because I was there, what they did is that they were buying on the way down. Blow it up all over the place. Okay. Then, what do? We go from 605, and it went all the way up to 1998. You went from 605 to 1190. Huge move, right? Then another disaster. Well, the first one, it wouldn't even call it a disaster. It's nothing. It's 15%, right? This one here, though, we go from 1190, and you pull back to 923. That was, I think people got hurt there. The amazing part about that one there, though, that wasn't a wipeout like that first one was a wipeout. And the reason, now check this out. People were hurting there, there's no doubt. But I think most people, weren't over-leveraged to a certain point, so you had a much larger correction, much larger, okay? It was like the end of the world for some people. You went from 1,200 to, so it was 25%. But it was because it was choppy on the way up that people weren't so leveraged. Make a long story short, that run there, though, went from 472 all the way up to 1552. You pull all the way back, so that took quite a bit, right? You pull all the way back. In 02, you get to 768. You make another run to the highs, and then we crash, right? Well, when I was looking at this earlier today, we crashed down to 666. But the reality, the reality is that this has been the longest run since the run from 1995. You can actually make the case from in a much shorter period of time. You know, because the reality is that you not only went to the high, you went over the high, and if I put this on a quarterly chart and you take a look at it, you're going to see that it's absolutely just it's definitely a straight line move since 2011. December of 2011, that's when the S&P was 1074. So you've really gone up 100% without a pullback. It's not, and that's not unusual. When I was looking at this, this is an unusual time. But you know what? When I look at some of these other streaks, it's actually not unusual. What does happen is that, you know, at some point, yeah, and when we're talking is that I'm Terry and the gentleman saying, you know, it looks parabolic. It certainly is not a 45-degree angle. You know, what happens, folks, is that a 45-degree angle is a nice angle to go up. This is more a, say, a triangle on me right now, but looking at that, it's pretty close to a lot bigger than a 45. Let me just see this for a second. Oh, yeah, it's not even close. Yeah, it's about a 55, maybe 60. Bottom line is there's no juice, you know. And so now this comes back. The reason I just did this comes back to the aspect of why you're seeing so many CEOs turn over. If you've been in the market this long, you know that the market gives and the market takes. You better take when the market is given, folks, okay? Because guess what? It doesn't keep giving and giving and giving. Those CEOs out here, Ellison himself, he's going out in the top again. There's no doubt about it. I love the guy anyway, because I love what he did with the sailboats. I mean, it's pretty amazing. The America's Cup, how that was pulled off. So competition-wise, that I suspect that's one of the best competitions I think in any sport that we've seen. You talked that comeback was absolutely extraordinary. And when they were actually practicing, they practiced, you know, I saw the races in Newport, but they practiced, and one day, folks, we're out sailing, so check this out, this is pretty cool. They're out sailing, and it's raining, and no one went out, and I went out, and we were sailing, and these boats were coming by us within about 15 feet, and it was so cool, because there's no one else out there. You could hear them talking, you could hear them running, it was pretty incredible. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow Industrials finished up 109. Nasdaq up 31. S&P's up 11.5. Tomorrow, Alibaba, triple witching. Scottish vote tonight. All of the above. Come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Right now, you had the Dow finish up 109, NASDAQ up 31, and this Home Depot deal is a trip, and it's not hurting the stock any, but the Home Depot breach, folks, is much larger than what was reported, number one, and much larger than the target one. It's 56 million cards. Home Depot said the data breach between April and September put about 56 million payment cards at risk. Signaling the hacker attack was bigger than the one that struck Target Corporation. They figure that it's going to cost Home Depot. They expect to pay $62 million this year to recover from the incursion, including additional costs for call center staffing and legal expenses. Insurance will cover $27 million of that cost. That's a big number. There's no news that has really been coming across yet about the vote in Scotland, which is pretty wild here. Is that, picture that if this vote was in the United States. Right now, it's you're talking about in the middle of the night in Scotland. It's 5 o'clock. If this was here, would have exit polls and all of the above. So it's intriguing that there's not stories that are coming across on the headlines here about even any speculation. And it's like, okay, what does that mean? Are they worrying about pushing? And this is where news media folks, basically control quite a bit. Meaning, and I'm looking at this in the context that, you know what, guess what? That yes vote might be going pretty good. Because if the no vote was going good, the way that the 8:50 no, it's later than 8:50 in the UK. There's no way. It's 4:50. The UK is 8 hours ahead of us, or 5 hours ahead of us, right? Or maybe it's only 4 now. Is it only 4 right now? I see. According to British law, there's not allowed to be any commentary until the polls close. Oh, I see. I'm in Andy Hex is telling me that. Oh, that's pretty wild. Okay. Okay, well, we'll find out. We'll be listening to Andy. 4 hours during daylight savings time. So that's nothing. 4 hours is nothing. That's why I should know that from the markets closing at 11:30 in the morning. Yeah, 4 hours is nothing, man. Well, we'll have some fun tonight, won't we? There's no doubt about it. So we'll see where that shakes out. Okay, so tomorrow morning, you're going to have well, first off, tomorrow morning, folks, we have option expiration. We have the futures that expire on the open at 9:35 to be exact. So what does that mean? Okay, so this is what it means. The aspect, let's bring the futures up. So the aspect as to where the futures are, you normally see spikes in the futures. And specifically, and then you're going to see it give it up as fast as, like, immediately, which is amazing. So if you have the futures down in the morning, you'll see them go the other way. If you see the futures up, they go the other way. Then they'll start straightening themselves out, about a half hour, about 20 to 30 minutes into the market close. Because it's an average of that number, like I believe about 1 to 2 minutes. So many trades that they put together, and that's what they base the number off of. So you're going to see volatility out here in a huge way. Then you're going to see volatility. Well, I suspect volatility is going to be out here all day. But on the open, the volatility is going to be huge. And then on the close, the volatility is going to be huge. The volatility on the close is going to be huge because you have all the options expiring. And in this particular case, what we also have is that you have the aspect that the hedges that will be put on. Now, what was really strange this morning, and this is where there's still huge amounts of misinformation that's out there. And I really like this guy, but it blew my mind that he actually, I guess he's an old school, and maybe he doesn't realize because maybe he doesn't trade anymore. Art Cashin, okay, at the New York Stock Exchange, they were talking to him this morning, and they were talking about the aspect of hedge funds and trades and when trades settle. And he actually brought this up. And what this is about is, this was about the downdraft that was created on Monday versus what we had, we came all the way back. So Monday you come down. Many analysts were speculating that, hey, what that was all about is that was all about selling to buy Alibaba shares. And what they always keep bringing up, folks, is that they bring up this 3-day settlement rule. Now, there is such a thing as a 3-day settlement rule, folks. Years ago, 3-day settlement, yeah, you wouldn't get it in your brokerage account to 3 days. That's not even close anymore. You get your money to trade, depending what kind of account you get. Hedge funds get their money to trade that second, okay? That second. It's sold, you're done, okay? That has nothing to do with money allocated to go buy Alibaba. So what was said at that particular point is that they thought that, okay, then they didn't get enough shares of Alibaba, so that was what the expansion to the top side was yesterday. My point in all of this is that when something like that comes across and it's not factual, it's a drag in the context of how the overall market is structured. Because there's so many misinformations that are out there that you just want to wrap your head around it, And so if you do have a 3-day settlement inside your broker-dealer account, guess what? Get over to TD Ameritrade, because at TD Ameritrade, even if you don't have a portfolio account, what you are going to get is that you're going to be able to use that money the next day, okay? You trade today, you close today, you'll use it the next day. You have a portfolio account, you're going to be able to trade today, get rid of that stock, buy another one, get rid of that stock, buy another. You can do that as many times as you want all day long. And forget what the hedge funds. The hedge funds could, you get the point of the story. There's all that 3-day deal, okay? Last time I remember the 3-day deal, actually, is you're going back maybe 15 years. I mean, it's a long period of time. What I do expect we're going to see out here tonight in the currency market. So in the currency market, you're going to get some nice volatility. There's no doubt about it. We've had huge volatility in the currency market. The euro, the yen, the dollar. You know, the yen, check this out. The yen has just gone straight up from 101 to 108. That's getting weaker. As that's getting weaker, okay, what does it do? That basically will put some juice under the exporters in Japan. Our own dollar, that's getting stronger. What does that do? What that does, that brings down the prices of commodity across the world. Well, no, across the world, it brings the commodity prices up. In the United States, for us, it makes us richer by doing nothing. Why? Because what ends up happening, the more the dollar's worth, the less we pay for everything. It looks that this winter, what's going to happen is that oil, natural gas, gasoline, all of the above, we're going to be saving a lot of money on right now. Gasoline, unleaded gasoline, wholesale is $2.56. This $2.56, folks, okay, looks to me like it's going $2.25. $2.25 wholesale, it's going to get us under $3 right across the good old USA. It's Tom O'Brien. This is TFNN. You stay right there. Our man, Mr. Andy Hex, coming up next. Don't forget about our competition, folks. We're giving away $10,000 in cash. You just sign up. You get into the Tigers Den, growl and prowl with them. We do a workshop next Thursday night. Have a great one. Have a safe one. Stay right there. Our man, Mr. Andy Hex, coming right up. Go get him, folks.